170 odd. But let's focus on GMR airports. They posted a strong set of numbers in the past quarter. Passenger growth was steady. Revenue as well saw a good jump, while margins expanded as well. Vivek caught up with Saurabh Chawla, the ED Finance and Corporate Strategy of GMR Group, to discuss the company's Q2 performance and began by asking him about the passenger growth. Let's hear him out.
So on a quarterly basis, the passenger growth has grown 25% year on year, which is very healthy. We are touching now a little more than 50 million passengers within the group, and as you are aware, Q2 is a little bit of a lean season in aviation. There's a seasonality in our business. Q3 and Q4 are busy seasons because that's when the holiday season also kicks in. So the outlook for the second half is more buoyant than what it was in the first half. So that's how we're looking at the whole year for fiscal year 24. To your response to your other question with respect to simplification of corporate structure, we have received the approvals of creditors, which had been filed in the form of affidavit with the NCLT, and based on that, the NCLT has directed us now to convene a shareholder meeting, which shall be happening on December 2.
Absolutely, sir. Thank you for breaking down the timelines of the entire process. Now, the next thing what we want to know is, in GMR Hyderabad Airport, you've gone ahead and increased the stake. Number one, take us through the contours of this particular deal. How did you arrive at the valuation, and what was the rationale behind going ahead and increasing stake there?
Well, we have been always on lookout to buy back some of the stake to consolidate our holding. I think the fact that we have bought it reposes our confidence in that asset and in the future of that asset as such. It's a negotiated deal. If you were to look at what the analysts are valuing this particular asset and at what we have bought, there's a significant arbitrage which is there. So we've been able to negotiate well to enter into a buy agreement with Malaysian Airport, and obviously the valuation also reflects it's an unlisted company, and there are other parameters that are there. So obviously we found the value compelling, and hence we negotiated a transaction. So with this, we will have significant stake in Hyderabad. We hope that as we go forward, we can further consolidate our stake in various airport assets.
Thanks for the clarity on that, sir. So the next question from our end is, currently, what is the total net debt on books? Because on a sequential basis, there appears to be a slight increase as far as debt is concerned. So what was the reason for that particular debt? We also understand that there has been an FCCB issue. So going forward, end of FY24, can you guide us to how exactly the debt picture will look at, and what kind of interest cost savings you could accrue FY25 onwards?
See, we have already right-sized our debt. There will not be any further reduction of debt. We have right-sized our debt with the issuance of the FCCB, which we did in the last fiscal year. That money came in, and we made our corporate debt zero. So, as a matter of fact, we are holding cash in the Listco, which is the entity which owns 51% in GMR Airports Limited. So you have to look at debt, whether it's the right size debt, given the fact that how much EBITDA is emanating from it. As you are aware, we have done substantial expansion both at Delhi and Hyderabad Airport. Those expansions are now getting completed. And as they complete, the traffic continues to grow. And if we keep the momentum of traffic growth, then obviously this debt becomes very well serviced. If you look at most of the credit agencies, they are subsequently improving the quality of our rating in both the assets.
Thank you so much for the clarification as far as the debt picture is concerned. Healthy EBITDA generation is something that we've seen both sequentially as well as year on year, as you've pointed out. A lot of new airports also coming on stream. So are you interested in any of them? Along with that, you did mention that the majority of the capex as far as the Delhi and Hyderabad airport are now behind us. So when can we see the fruits of that flowing in as far as the P&L is concerned?
So fruits have already started flowing in. Many parts of our expanded terminals are operational. Some are yet to get operational, which hopefully in next 2 to 3 months will get fully completed. But the traffic is coming back with I would say vengeance, and our assets are ready. So it should start reflecting in its full form in fiscal year 25 when these assets are fully capitalized and traffic flows through these airports, along with the retail and the duty-free revenues businesses that we have within these airports. So very, very well positioned, both from traffic perspective, completion of our capex, and the momentum that we see in the airport space. Again, I want to highlight over here, which I've been educating a lot of investors. You see, India is in the same position as China was in 2010. Per capita income in India is today about $2,500, and exactly the same thing was in China in 2010. And if you were to study what happened to the aviation sector in China, it grew at a CAGR of more than 15%. In India, if we were to look at it, we are growing at almost 2x of our growth per capita GDP growth. So if the GDP growth is about 7%, our aviation market is growing at about 15%. This has empirically been seen, and we believe there will be further momentum added to it as and when the government brings further privatization of airports, hopefully in next 1 or 2 years. So we will surely participate in those privatizations. We will be very conscious of what returns we make. We are not in the race to become the largest airport operator, but yes, we want to be the most profitable, and we want to reward our shareholders. So that's the India landscape. In addition to that, we have airports abroad, and we have an airport in Indonesia, in Medan. Last year, we sold our airport in Cebu in Philippines. We made a good 3x money on our investment in Cebu. We are looking at other opportunities. We are developing a greenfield airport in Greece. So a lot in our hands, and the portfolio is only expanding and adding value to our current business model.
Okay, well, that is GMR in conversation with my colleague Vivek, and of course the takeaways at the bottom of the screen.